Like the leaves changing colors this fall, the housing market is expected to see a shift, spurred by three breaks on the interest rate this summer from the Bank of Canada.
There's a renewed sense of confidence amongst consumers. They've been waiting for these cuts. I do think that there's a lot of pent-up demand.
According to Remax's fall outlook, residential sale prices are expected to jump between 1 and 6% this fall in the majority of Canadian regions surveyed. There are some exceptions, though, notably Toronto, Hamilton, Burlington, and Kitchener-Waterloo, Ontario, where prices are expected to be flat or decline. A snapshot this week showed a sluggish market in the Greater Toronto area in August, with sales activity down. TD's Rishi Sondhi says condo sales in particular will continue to struggle this fall, but that may be a plus for people waiting to get on the real estate ladder.
And that'll be helpful from an affordability perspective, particularly for first-time home buyers who tend to buy those units as sort of their first home.
But Remax's president continues to call for a pause of the current mortgage stress test, which requires buyers to prove they can afford the higher interest rate of either 5.25% or the rate negotiated with their lender plus 2%.
That policy was put in place as a preventative measure in a rising interest rate environment. And now we're in a declining interest rate environment. I don't think it's fair to that segment of the marketplace that deserves a chance to start building some equity.
Even with that financial guardrail in place, many analysts expect more signs of life across Canada's housing markets this fall and beyond, though unaffordability remains high.
Fairly healthy sales gain in the fourth quarter of this year, supported by lower interest rates. But the level of activity, in our view, is going to remain well below pre-pandemic levels.
Anne Gaviola, Global News, Toronto.